Tired of giving away your hard-earned cash to the government in taxes? It's time to take control of your finances and keep more of what you've earned. In this video, we'll expose the secrets of tax-efficient company formation and reveal the top countries to incorporate your business for maximum profits and minimal taxes. The importance of entity structuring. When it comes to minimizing taxes and maximizing profits, entity structuring is key. Think of entity structuring like a game of chess. You need to think several moves ahead of the taxman if you want to come out on top. But most entrepreneurs and businesses fail to optimize their entity structure, leaving them vulnerable to unnecessary taxation and financial losses. Entity structuring is not just about tax savings. It's about asset protection, risk management, and strategic business planning. A well-structured entity can help you shift profits to low-tax jurisdiction, protect your assets from lawsuits and creditors, optimize your supply chain and logistics, enhance your business's credibility and reputation. But here's the thing, entity structuring is not a one-size-fits-all solution. What works for a startup in Silicon Valley may not work for a manufacturing company in China. You need to tailor your entity structure to your specific business needs, industry, and goals. That's why it's crucial to understand the different types of entities, from sole proprietorships to corporations, and the benefits and drawbacks of each. In this video, we'll explore the different entity structures and how they can be used to minimize taxes and maximize profits. So, buckle up and let's dive into the world of entity structuring. Remember, the goal is to keep more of your hard-earned cash in your pocket and less in the government's coffers. So, are you ready to take control of your business's financial performance and join the ranks of the financially savvy? Switzerland, the old tax haven. Switzerland, the land of chocolate, cheese, and tax havens. For decades, Switzerland has been the gold standard for tax-efficient company formation, and it's easy to see why. From its banking secrecy to its low corporate tax rates, Switzerland has built a reputation as a safe haven for businesses looking to minimize their tax burden. First, let's talk about the banking secrecy laws. In Switzerland, bank accounts are protected by some of the strictest banking secrecy laws in the world. This means that your financial information is safe from prying eyes, and you can rest assured that your business's financials will remain confidential. But that's not all. Switzerland also boasts some of the lowest corporate tax rates in Europe, with an effective tax rate of around 8.5%. This means that you can keep more of your hard-earned cash and reinvest it into your business. And if that's not enough, Switzerland also offers a range of other benefits, including a highly educated workforce, a stable political climate, and a central location in the heart of Europe. But it's not all rainbows and unicorns. Setting up a company in Switzerland can be complex, and there are strict regulations around company formation. You'll need to have a solid understanding of the regulatory landscape and be prepared to jump through some hoops to get set up. Despite these challenges, Switzerland remains one of the top destinations for companies looking to minimize their tax burden. And with its reputation for stability and confidentiality, it's easy to see why. So, if you're looking for a tax-efficient jurisdiction that offers a high level of confidentiality and a business-friendly environment, Switzerland should definitely be on your radar. In the next chapter, we'll explore another top destination for company formation, Singapore. But for now, let's summarize the benefits of setting up shop in Switzerland. All banking secrecy laws to protect your confidential financial information. Low corporate tax rates of around 8.5%. A highly educated workforce. A stable political climate. Central location in the heart of Europe. Business-friendly environment. If you're serious about minimizing your tax burden and maximizing your profits, then Switzerland should be a serious contender for your business. Singapore, the Lion City's tax incentives. When it comes to business-friendly jurisdictions, Singapore is a force to be reckoned with. This tiny island nation has built a reputation as one of the most attractive places to set up shop, and for good reason. First and foremost, Singapore has a ridiculously low corporate tax rate of 8.5%. Yes, you read that right, 8.5%. Compare that to the likes of the US, where corporate tax rates can soar as high as 35%. But that's not all. Singapore also offers a slew of tax incentives designed to attract foreign investment and encourage entrepreneurship. For example, the country's startup tax exemption scheme, SUTE, grants qualifying startups a 75% exemption on their first $200,000 of taxable profits for the first 3 years. And then there's the Productivity and Innovation Credit Scheme, which offers a 400% tax deduction on up to $400,000 of qualifying expenditure in innovation and productivity enhancing activity. That's right, folks. You can write off 400% of your innovation expenses. Add to that a highly developed infrastructure, a business-friendly government, and a strategic location at the crossroads of Asia, and you can see why Singapore is a top destination for companies looking to expand into the region. But here's the best part. Singapore is serious about protecting your assets and keeping your financial affairs private. The country has strict bank secrecy laws and doesn't participate in the OET's automatic exchange of information.
EOI, under the Common Reporting Standard, clause.
In short, Singapore is the perfect blend of business-friendly policies, low taxes, and asset protection. If you're a savvy entrepreneur looking to optimize your company's financial performance, Singapore should definitely be on your radar. So, what are you waiting for? Take the first step towards setting up your Singaporean entity and start reaping the benefits of one of the world's top tax havens. Ireland, the Emerald Isles corporate tax haven. Ireland, where the craze is mighty and the taxes are even mightier. You might think of Ireland as a land of shamrocks and Guinness, but it's also a hotspot for multinational corporations and savvy entrepreneurs looking to minimize their tax burden. And for good reason. Ireland boasts one of the lowest corporate tax rates in the EU at 12.5%. But that's not all, me boyo. Ireland's got a plethora of incentive schemes and tax reliefs to entice businesses to set up shop on the Emerald Isle. From research and development credits to film production incentives, there's a pot of gold waiting for you at the end of the tax rainbow. And let's not forget about the double taxation agreement, network. Ireland's got a vast network of details with over 70 countries, ensuring that your business doesn't get hit with double taxation and maximizing your profit margins. But what about the brain drain, you ask? Fear not, me friend. Ireland's got a highly skilled and educated workforce, with many multinational corporations setting up shop in Dublin and beyond. And with a language like English being the primary language spoken, there's no need to worry about communication barriers. So, if you're looking for a European base with a low corporate tax rate, access to the EU market, and a talented workforce, look no further than Ireland. It's the perfect spot to set up your business and reap the tax benefits. Slinty. Hong Kong, the East meets West tax paradise. When it comes to Asian tax havens, Hong Kong is often overlooked in favor of Singapore. But don't sleep on Hong Kong. This special administrative region of China has a lot to offer businesses looking to minimize their tax burden. Hong Kong's tax system is designed to be low and simple. There's no tax on dividends and no tax on capital gains. Corporate tax rates are a flat 16.5% and there's no VAT or GST. But what really sets Hong Kong apart is its territorial tax system. Only profits sourced in Hong Kong are taxed, which means foreign-sourced income is exempt. And with over 40 double taxation agreements in place, you can be sure your profits will be protected. Hong Kong is also a major financial hub, with access to top-tier banks and financial institutions. And with its proximity to mainland China, it's the perfect gateway to the world's second-largest economy. But it's not all sunshine and rainbows. Hong Kong has strict anti-money laundering laws, and company formation can be a lengthy and bureaucratic process. And with the political situation in Hong Kong being what it is, there's always a risk of instability. So, is Hong Kong right for you? If you're looking for a low-tax, high-finance hub with access to the Chinese market, then Hong Kong might be the perfect solution. But if you're looking for a completely hassle-free experience, you might want to look elsewhere. Let's break it down. Pros. Low and simple tax system. Territorial taxation. No tax on dividends or capital gain. Access to top-tier banks and financial institutions. Proximity to mainland China. Cons. Strict anti-money laundering law. Lengthy and bureaucratic company formation process. Political instability. High cost of living. Ultimately, Hong Kong is a great option for businesses looking to tap into the Asian market while minimizing their tax burden. But it's not for the faint of heart. Bermuda, the island nation's tax benefits. Bermuda, the pink sand beaches, the clear turquoise waters, and the tax benefits that'll make your wallet smile. Located in the North Atlantic, Bermuda is a British overseas territory that's gained a reputation as a premier offshore financial center. And for good reason. First and foremost, Bermuda has a 0% corporate tax rate. Yeah, you read that right. 0%. That's a big fat zero in the tax column. This, combined with a highly developed financial infrastructure, makes Bermuda an attractive destination for companies looking to minimize their tax burden. But that's not all. Bermuda also offers a range of other benefits, including a highly skilled workforce, modern telecommunications infrastructure, and a business-friendly government. Plus, the island has a wide range of professional services, including law firms, accounting firms, and banking institutions, making it easy to set up and run a business. One of the most significant advantages of incorporating in Bermuda is the lack of exchange controls. This means that you can move your money in and out of the island without any restrictions, giving you more flexibility and control over your finances. Another benefit is the island's territorial tax system, which means that only profits sourced within Bermuda are subject to taxation. This means that if you're operating a global business, you won't be taxed on your international earnings. In terms of company formation, Bermuda offers a range of options, including exempted companies, limited liability companies, and partnerships. Exempted companies, in particular, are popular among international businesses, as they're exempt from taxation on their worldwide income. So, what are the downsides? Well, Bermuda is a small island, and its economy is heavily reliant on the financial sector. This means that there may be some limitations in terms of talent pool and infrastructure compared to larger countries. But overall, Bermuda offers a unique combination of tax benefits, modern infrastructure, and a highly skilled workforce, making it an attractive destination for companies looking to optimize their financial performance. In the next chapter, we'll be exploring the United Arab Emirates and its business-friendly environment. Stay tuned. United Arab Emirates, the UAE's business-friendly environment. The UAE, a business oasis in the desert. When it comes to setting up a business in a tax-friendly environment, the UAE is definitely a top contender. With its strategic location, modern infrastructure, and business-friendly policies, the UAE has become a hub for entrepreneurs and corporations alike. Here are just a few reasons why the UAE should be on your radar. Zero taxes. That's right, zero. Zilch. Nada. The UAE has a zero tax policy, which means you get to keep more of your hard-earned cash. No capital gains tax. Whether you're buying, selling, or trading, you won't have to worry about capital gains tax in the UAE. No value added tax, VAT. The UAE has a relatively low VAT rate of 5%, but certain industries and businesses are exempt. 100% foreign ownership. Unlike some countries, the UAE allows 100% foreign ownership of businesses, giving you full control over your operation. State-of-the-art infrastructure. From modern office spaces to advanced transportation systems, the UAE has invested heavily in creating a business-friendly infrastructure. Streamlined setup process. Setting up a business in the UAE is relatively quick and easy, with minimal bureaucracy and red tape. Access to a skilled workforce. With a large pool of skilled and educated workers, you'll have access to the talent you need to drive your business forward. Strategic location. The UAE's location makes it an ideal hub for businesses looking to tap into the Middle Eastern, African, and Asian markets. Free zones. The UAE has numerous free zones which offer additional benefits such as 100% foreign ownership, zero taxes, and streamlined setup processes. The UAE is an attractive option for businesses looking to minimize their tax burden and maximize their profits. With its unique blend of traditional Arabic hospitality and modern business practices, the UAE is an oasis in the desert for entrepreneurs and corporations alike. So, are you ready to take your business to the next level in the UAE? New Zealand, the Kiwi nation's tax-friendly climate. New Zealand, the land of the long white clouds, stunning landscapes, and a tax system that's as friendly as a Kiwi welcome. When it comes to company formation, New Zealand is often overlooked in favor of more popular destinations like Singapore or the UAE. But don't make the mistake of underestimating this Kiwi gem. New Zealand's tax regime is designed to attract foreign investment and encourage entrepreneurship. The country boasts a relatively low corporate tax rate of 28%, which is competitive with other OECD countries. But what really sets New Zealand apart is its lack of capital gains tax, withholding tax, and stamp duty. That's right, folks. You won't be slapped with a hefty tax bill just for selling your business or assets. And if you're worried about compliance, fear not. New Zealand's tax authority, the Inland Revenue Department, has a reputation for being one of the most efficient and taxpayer-friendly in the world. Another major perk of incorporating in New Zealand is its extensive network of double taxation agreements, DTA. With datas in place with over 40 countries, including major economies like Australia, the US, and the UK, you can minimize your tax liability and avoid double taxation. So, who is New Zealand best suited for? This jurisdiction is ideal for entrepreneurs and businesses looking to expand into the Asia-Pacific region, leveraging New Zealand's proximity to Australia and Southeast Asia. However, keep in mind that New Zealand has strict anti-money laundering and know your customer KYC regulations in place, so be prepared to provide thorough documentation and due diligence. In conclusion, New Zealand offers a unique blend of business-friendly policies, low taxes, and strategic location. If you're looking for a jurisdiction that's easy to work with and offers a high quality of life, the QE Nation is definitely worth considering. But before you make your decision, let's compare New Zealand to the other top countries for company formation. Stay tuned for the next chapter, where we'll pit these jurisdictions against each other in a battle of tax efficiency and business appeal. Comparing the top countries for company formation. Now that we've explored the top countries for tax efficient company formation, it's time to compare and contrast these jurisdictions to help you make an informed decision for your business. Let's start with Switzerland, the old tax haven. With its strong banking secrecy and low tax rates, Switzerland is an attractive option for businesses looking to minimize their tax burden. However, its high cost of living and complex regulatory environment may deter some entrepreneurs. Singapore, on the other hand, offers a business-friendly environment, low taxes, and a highly developed infrastructure. But its strict regulations and high barriers to entry may make it less accessible to smaller businesses. Ireland, with its low corporate tax rate of 12.5%, is an attractive option for businesses looking to establish a European presence. However, its tax regime is under increasing scrutiny from the EU, and its strict regulations may make it less appealing to some entrepreneurs. Hong Kong, with its low taxes, business-friendly environment, and strategic location, is an attractive option for businesses looking to tap into the Asian market. However, its high cost of living and complex regulatory environment may deter some entrepreneurs. Bermuda, with its zero tax regime and business-friendly environment, is an attractive option for businesses looking to minimize their tax burden. However, its high cost of living and limited infrastructure may make it less appealing to some entrepreneurs. The UAE, with its business-friendly environment, low taxes, and strategic location, is an attractive option for businesses looking to tap into the Middle Eastern market. However, its complex regulatory environment and high cost of living may deter some entrepreneurs. New Zealand, with its business-friendly environment, low taxes, and stunning natural beauty, is an attractive option for businesses looking to establish a presence in the Asia-Pacific region. However, its remote location and limited infrastructure may make it less appealing to some entrepreneurs. So, which country is the best for your business? That depends on your specific needs and goals. Do you prioritize low taxes or a business-friendly environment? Do you need to establish a presence in Europe, Asia, or the Middle East? By considering these factors, you can make an informed decision that will optimize your business's financial performance and protect your assets. Remember, minimizing your tax burden and maximizing your profits is just the first step. With the right strategy and structure, you can take your business to the next level and achieve the financial freedom you deserve. Conclusion: choosing the best jurisdiction for your business. Now that we've explored the top countries for tax-efficient company formation, it's time to put it all together. From Switzerland's banking secrecy to Singapore's business-friendly environment, each jurisdiction has its unique advantages. So, how do you choose the best country for your business? First, consider your business needs. Are you a solo entrepreneur or a multinational corporation? Do you need access to a skilled workforce or proximity to major markets? Next, evaluate the tax benefits of each country. Which ones offer the lowest tax rates or most beneficial tax regimes? Then, assess the regulatory environments. Which countries have the most business-friendly laws and regulations? And finally, consider the overall cost of doing business in each country. Which ones offer the lowest costs and greatest value for your investment? By weighing these factors, you'll be able to make an informed decision about the best jurisdiction for your business. Remember, entity structuring is not a one-time decision. It's an ongoing process. As your business evolves, your entity structure should too. Stay adaptable, stay informed, and always keep your eyes on the prize, maximizing profits and minimizing taxes. In conclusion, the best country for your business is the one that best aligns with your business goals and strategies. So, don't wait any longer. Take the first step towards optimizing your business's financial performance and protecting your assets. Choose the best